Asian stocks are under pressure once again as slowing demand from China, rising inflation and interest rates continue to dampen investor sentiment. Tech stocks are among the biggest losers. Industry giants Apple, Microsoft, Tesla and Alphabet have lost more than $1 trillion over the last 3 trading days. Apple alone, the most valuable publicly traded company, has seen its market capitalization trimmed by over $200 billion since Wednesday, when the Fed raised interest rates by a half a percentage point. Tech's latest IPOs are also taking a real beating. Companies such as Robinhood and Rivian are down by more than 70% from their initial offer prices in less than a year. The Fed's monetary policy, but also inflation fears and slowing demand from China seem to be driving the panic on the markets. Let's now go to Naeem Aslam, who is Chief Market Analyst at AvaTrade in London. Naeem, many thanks for being with us this morning. First of all, do you agree? I mean, some analysts are saying this could actually be a market repricing after very high valuations in 2021. Do you agree?
Thanks for having me. Look, what dovish monetary policy does is it inflates the equity market. We have seen several episodes of these ones really taking place. Every time the Federal Reserve, central banks around the globe, they begin the dovish monetary policy stance, they start printing money. That really inflates the market. And if you look at the US equity indices, right, and then you look at them from year-to-date performance, it's not really telling us that yes, look, the sell-off. This is a matter of a concern, because Nasdaq is down by 17%. It's not down by 30%. It's not down by 40%. I mean, even at those levels, even at current levels, investors are still anticipating for these markets to drag a little bit more lower. However, I do wanted to say that there is a stronger possibility that the rebound is just around the corner, because inflation seems to have peaked. And if that is the case, that means monetary policy has also peaked as well.
Interesting. So a rebound might be around the corner. Although, do you expect to see a full-on recession for the rest of the year? And also, are these single-day drops, or could this really be a bear market?
Well, I think by definition, we are in a bear market for all the major indices, whether we are looking at the European markets, whether we're looking at the US indices for sure. Now, whether this is a full-blown recession, I think the chances of that taking place are still minuscule. But again, that depends from continent to continent, because if you look at the situation in the UK, it's immensely dire. Consumer confidence has plunged. Consumer spending has also humbled. So yes, a technical recession could certainly take place. But I think in the US, situation or economic data is still kind of robust enough. So if there is a recession in the United States, and that is a big if, I think it's going to be very short-lived.
Naeem Aslam, many thanks for being with us today.